Hi, this is Ron Janish. If you notice a difference in my voice, it's because I have a bit of a cold today. Anyway, what we're going to do is we're going to go over the process that we use for people who are in the expanded course this year. Anybody who joins up this year winds up getting this as a bonus. It's really kind of neat. And what we do is give you 4 setups. Okay, so you could look at a chart like this and you could instantly find that in this area here you had what we call a number 1, here you had a number 1, here you had a number 4, here you had a number 2, here you had this was a number 1, this was a number 1, this was a number 2, and this was a number 2. So you could look at the charts and label them that, okay, and these are setups. And so what happens is that you can use a setup to help predict when a turn is likely. This particular chart is the Australian dollar, for example. And so you could see over a period of time since last March, 1, 2, 3, 4, 5, 6, 7, 8. 8 of these easily identifiable patterns, and there's really 1 or 2 things you look for, and then you simply say, does it belong to this subgroup or that subgroup? That's how you get patterns 1, 2, 3, 4. And so, because anybody that sees this when you see pattern 4, for example, that's also pattern 1. And so it kind of raises to different levels. Anyway, rather than getting all that complicated stuff, which is unnecessary, what happens is I gave this to Matthew, for example, and so he ran with it. His mission was simply to go through the last year in all the different futures and label them. Okay, so he went and did that and sent me over the charts that he did, and he just take it and copy paste the ones he found on a Word file and send them over. And so he did that, and then that was step 1, and that helped get him familiar with development of a mechanical system. And so as he went through those, he found criteria that he could use, which came from the course, in order to determine when to get in, when to get out, and how much risk to take. And after doing that, then he went through all I think it was 30 some odd futures contracts, different ones, silver, gold, bonds, whatever, that and determine when those things were. And so he listed them in here, and in here also, if you move this out here a bit, there we go. Anyway, it's in here somewhere. Um, let's move this here. There we go. And so he put these all in here, and he wound up figuring out how many winners and how many losers he had and all that kind of stuff. And I go through and I check it over. And one of the things I do with him is I help him out with is making sure it's really a computerizable mechanical system. And the reason I do that is not necessarily because he's going to computerize it or mechanicalize it, is because the whole idea is to have something that's mechanical, that if he communicates it to someone else, they will take that exact same thing, do the historical study, and come up with the same result. That's all we're looking for. And so what he did his study, and what he found was that he had a total of 74 trades. And out of those 74 trades, I had him look at how much was the drawdown and how much was the win, loss, and drawdown. And so if you have a losing trade, for example, here's a losing trade, big one. Yeah, $3,289. Um, and here's a small one, minus 380. Then what happens is that winds up being all the drawdown it had, of course. And in some cases, you just get in and have very little, if any, drawdown, and just go, 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 and it wins. Okay. So what he did was he did his study, and what he found was that he wound up with a whole bunch of winners and a few losers, and I made a little modification on it, not in terms of the system itself, but in terms of the criteria, and I'll show you what I mean. We looked at this here and said, well, okay, if you put on a trade and because you have your stop loss right away and you have your target right away, no question. Before you have that even before you put on the trade. How many winning trades did you have? How many losing trades? And what I did was I capped it at $1,000 in terms of a loss, because some of the things he's into includes crude oil, and these can have some pretty wild swings. For example, crude oil had an $1,800 swing, as you can see up here, and here's another one with an $1,160 swing. And in terms of a drawdown, okay, but then eventually it wound up winning close to $4,000 on each one. So he said, well, what about if we made a little modification to this system and simply said, if every time a trade is put on, and we said the risk was a maximum of $1,500. So you figure out what $1,500 is, and you put your stop in there, and then you put your exit profit stop in and let it rip, right? And so you do that. What would the results have been? And the answer was a little bit less than, about 20% less than had he just let the whole thing rip. Okay, so of course, he had more losing trades as a result, but still he had a pretty good number. And the reason we did that in terms of the test, the $1,500 per trade test, and you can lower that to $1,000 or $900 or whatever number fits your fancy, is that when you put on a trade and leave it on, you don't wind up going crazy with anxiety, because there's sometimes when you look at where the exit is, the stop loss is, that would be if it was a losing trade and you didn't have a maximum, and it might be $3,000, $4,000, and we don't want to get into that. So we put a limit of $1,500, and what we came up with was really kind of cool. Let's see what happened. We had 1, 2, 3, 4, 5, 6, 7, 8. No, this one, no, 6, 7. This one's not a baddie. Okay, so 8. We had about 10 or so losing trades versus only 5, but the result was a lot more psychological comfort. There was also less profit, but once a trade hits negative $1,500, boom, it's out of there, it's gone. So now we also tried it with a lower number of 1,000 and came up with something that was around it was around $12,000 less than that, so it was around 86,000 or so in terms of the net win. And this was the system that Matthew put together and developed. Now, along the way, what I do is I work with him on keeping him on track to keep it mechanical. and I work with him or any other student that's in the expanded course program, because that's where we have all these really interesting things that Andrew's had for buy and sell things, and and the things that I've developed that I found have been pretty decent. And so we do is we go through him and test it out, and this is stage one of the test. Okay, there's going to be two more stages of the test he's going to do, believe it or not, and we don't know yet what kind of results he's going to get on those two other stages, but they're going to be in different time frames. These are daily time frames, and so and this stuff up here is gibberish. It's not true. Um, so this is daily time frames, and all he's really using is what I call a pattern one. Pattern one has to be true, and once he's got a pattern one with our using our standard pivot formula, he's got trade on, and if he does that with this system here, with $1,500 cap, uh, he can have a pretty good expectation of having a good number of winners. Okay, and what's important now is we didn't, skew or modify anything for different futures. They all have the same criteria. Okay, and in terms of what you use to buy and what you use to sell, and go from there. Okay, so um, that's all we have right now. If you got any questions, give me a call or send me an email. And ronjanish@gmail.com is a good one as any. And let's see what else. Yeah. In order to do this in 2020, you're going to need to be in the expanded course program, because that's where all the fancy stuff is. And in addition, you're going to there's a limit of one person per month that I'll take on for this. So I might be doing a couple people at a time if somebody takes more than a month to work with on this. But one person per month is my limit on this here. Okay. So I thank you for your time, and we'll see you next time.